Okay, good morning, everyone. Excuse me. Wonderful. I see some comments coming in. How's everybody doing this morning? Excellent. Do you see my charts up? Perfect, perfect. So, good morning. This is another session of Coffee with Markus, minus the Marcus. It's just me today. Marcus is doing a little traveling, so I'm sitting in for him. And I thought that we'd do a little of everything today. I know sometimes we focus on a specific topic, and there are a couple of questions I want to answer that popped up, but I thought that we just kind of do what my day's like, and then answer a couple of questions. So let's first start off with the economic calendar. So this is my routine. Every morning, first thing I do is I take a look at the economic calendar, see what's in store for the day, see if there's anything I need to pay attention to. And today is Thursday, September 28th. So looking at the economic calendar, we have final GDP and unemployment claims. These are labeled as red flag reports at 8:30 a.m. Eastern time. So these already came out. And then we have a couple of yellow red flag reports at the same time, but most people would be talking about final GDP and unemployment claims. Okay, I'm trying to reset. Oh, okay, are we good now? Okay, so did you hear me talk about any of the reports? Okay, okay. I don't know what happened. That's odd. But I'm glad I'm back. I guess there was a little audio break. Um, anyway, I wanted to go through my routine as a trader, and this is what I do first thing before I do any trading in the morning. This morning, we had final GDP and unemployment claims, red flag reports released at 8:30 a.m. Eastern time, and then a couple of yellow flag reports. The red reports are the major ones, and then we see that a little bit later on this morning, FOMC member Fisher is speaking at 10:15. This is a medium impact report. This is a bit of a wild card, and this is one that it could go either way. And if you're a conservative trader, you might use a little caution around that. Any comments by Yellen is the biggie. I mean, this is what traders are really focused on Tuesday, and you kind of saw the market waiting for her speech and to hear if she had any news or anything that she might let slip about what the Fed plans and what they have in store. Other than that, it's a free and clear day, so a lot of the key reports or the key reports this morning came out already at 8:30 a.m. So if we go to our charts here, we see that the E-mini S&P is pulling back a little bit. NASDAQ is down a little bit. The focus yesterday was on tax reform and President Trump's and the Republican tax reform plan that was released, and it was received quite well by the markets. Markets finished higher and got a nice little boost yesterday because of the idea that tax reform could help growth and that money saved in taxes would be used to be put in the economy. So markets seem to enjoy the idea of tax reform. Now things are pulling back a little bit. We see that crude oil is back above or moving higher again today, up 0.9%, almost a percent, and crude oil we did have a binary option signal in crude oil. If I slide this over again, I'm doing some day trading. I'm also trading binary options. I'm also trading equity options. So this is my routine, going through, seeing what opportunities we have for the binary options. And crude oil did trigger. The trigger price was the previous day's high, and we were looking to buy the 52 strike, entering at a price of $66 or lower. Based on this market and how it's traded and the signals we use, we expect that 76% of the time we will close above the previous day's close. So that means that our 52 strike would work perfect since it's below the previous day's close. So looking to see it, we're not in the trade yet. Let's see. Check. Nope, the order's still sitting there because crude did trade higher, and right now it's at 52.62. So not in the binary options trade yet. Yesterday was a great. We talked about binary options, answered a bunch of questions yesterday, put in a couple orders, and yesterday 4 winners, 4 fills, 4 winners. So nice day for binaries. Looking at the other markets here, the E-mini S&P or US 500, we have a buy signal. Right now, if we look at the chart, we see that, oops, let me slide this down so we can see charts. Oh, it doesn't want me to do that. Let's try this. No, okay, let's try this. There we go. So here we have the E-mini S&P. The trigger's 2509 and a quarter. We'd need to move higher to have a trigger with the S&P. And NASDAQ actually has a sell signal, and right now the NASDAQ's down a little bit, but not near the sell signal as well. YM, we have a buy signal. We'll watch that after 9:30 Eastern time. And gold and silver, they had sell signals. We could quickly look at those markets, see where they are at for the session. Silver is actually up a little bit, so no trigger yet in silver. And if we go to gold, gold came down. The trigger price is trading below 1285.3. Got down to 1285.4. Now we're closer to break even for the day with gold. So nothing going on in gold right now. Now, with crude oil, I do like to trade our Seahawk strategy trade. The Seahawk strategy is a scalping strategy where you're just looking for a move back into the previous range. So with a scalping strategy, the best time to trade it is whenever you see a range breakout, and that's why we use range bars, right? So every time we get a new bar, we break outside of the other range or out of the range that we've specified. It is perfect for using range bars or trading with range bars. Every time we break outside of the range, we know that there's a good likelihood that we're going to come back within the range, but we found that longs tend to outperform, and that's why we're focused on longs in crude oil. So I have an order there at the 52.58 to buy, and with the Seahawk strategy in crude oil right now, I'm using a 6-tick target, 12-tick stop loss. So I have an order in the market there, and waiting for U.S. markets to open up. And while I see if anything happens with crude oil, we'll come back to crude if I do get a fill and talk about it. But while we wait for that, I thought it might be good to address some of the PowerX questions that have come up. And I want to talk about the performance report and what to focus on with the performance report. And then we'll answer a couple of questions that are in the, I don't know what it's called, there's that question app that Markus came across. It's really cool. But there were a couple of PowerX questions that we could address there too. So when we're looking at performance, a lot of new traders are drawn to performance numbers that, in my opinion, aren't as important as they should be. And so I thought that taking a closer look at the performance report today might be a nice topic, since there were a couple of PowerX questions that have come up recently. And what we do is we give a quick little snapshot of performance here based on signals that have occurred in the past and the entries and the exits once we optimize the stock looking for the best way to trade this particular stock in the PowerX Analyzer. Now, when many new traders are looking at performance, the first thing they look at is the winning percentage. There's this idea that high accuracy means big profits, right? And I'm not knocking anybody that loves high winning percentage trades. I mean, that's one of the reasons why I like the Seahawk strategy. It's very accurate. You have more wins than losses, and it feels good to be right most of the time. And as a new trader, when I first got started with trading, I wanted to be right all of the time. But as I matured and I grew as a trader, I discovered that winning percentage was just a small factor in the actual performance of a particular strategy, and one of the least important factors. Now, I think it's good for reference. Don't get me wrong. I don't just throw out the winning percentage and say, oh, we don't need to pay attention to it at all. It doesn't matter. That's not the case. I think it's good for reference and to have an understanding or an expectation of how many wins and losses you can expect. So as an example, right here, with this particular stock, ASUR, the winning percentage based on these signals is 35%. And that's pretty low, right? 35%. But this would mean that 35 times out of 100, we could expect to have wins. And it might get better, it might get worse. But right now, based on the information that we have, I think it's good to really recognize that if that was something that we wanted to trade. So we're going to potentially lose 1 out of 3 times. However, this is why the winning percentage alone isn't so much of an issue, because if we look at the profit target, the profit target's $4.51, and the stop loss is 67 cents, right? So, oh, I just got filled on crude oil. We can pull this over because I do want to put in another trade, and we could go back to that conversation. So crude oil filled, and actually, I don't need to put in another trade yet. So if we get closer to the target, I'll slide this back over. I'm watching it on my other monitor. If we get stopped out, I'll put in another order and we could watch that, see what happens. So let's go back to PowerX and let's talk about the profit target and stop loss, or risk reward, compared to the winning percentage, because these two ideas need to go together. They really can't be separated. But many traders that are just getting started or new, actually we could put up the ladder right here so we could be distracted by bouncing numbers while I talk. So again, this is such an important concept, and sometimes it's not immediately clear when traders first get started, and sometimes with traders that have been trading for a while, you haven't had that aha moment and how important these two ideas are. But they are married together. The winning percentage and the risk reward cannot be viewed independently, because if we just look at the winning percentage and we say, oh, that's a 35% winning percentage, it's a bad strategy. That is incorrect. Because if you have a strategy that makes $20 for every dollar risk, your target is $20 and you're risking $1, and the winning percentage is 35% with that strategy, that is a very, very profitable strategy, right? Now, if you have a winning percentage of 35% and you're making $1 for every dollar risked, so 35 times you lose $1, 35 times you make $1 and 65 times you win $1, that's a losing strategy, right? So the winning percentage alone cannot be used to evaluate a strategy or performance for a particular strategy. If we have an 80% winning percentage, a lot of people will think, oh, that's a wonderful winning percentage. I'm right 8 out of 10 times, or 90% winning percentage. I'm right 9 out of 10 times. That's very attractive to traders, because high accuracy, people like to be right. They like to make money. They don't like to lose, right? But if you have a very high winning percentage, and let's say you're risking $10 to make $1, right? If you are right 90 times out of 100 and you have a 90% winning percentage and you make $1 when you're right, but then you lose $90 when you're wrong, it's a wash. It's not a good strategy. And let me go ahead and put in another order. We just had a win there in crude oil. I'm going to put another order at 52.51 and go back to, actually I need to slide this over so I could see it too, since we're not in a trade yet. So trying to manage a couple of things here. I see that the market's just open. We don't have signals in binaries triggered right now. And we'll just talk a little more about PowerX and then wrap up our coffee. I want to do this. I'm trying to balance too much. I like to try and do too much. Okay, so we have an order there. We'll see what happens. Keeping an eye on it on my other monitor. So there's winning percentage, right? And think in terms of what happens over 100 trades. So if you have a 65% winning percentage, don't just think, oh, I like that winning percentage. Really think what that means. Based on a 65% winning percentage, I can expect, not that it will be true or that it will play out that way, but I could expect that with a 65% winning percentage, 65 times I will be right out of 100, 35 times I will be wrong. So really make it more tangible. Don't just isolate this number and think 70% good, 50% bad, 60% good, 40% bad. You really think about what that means. And remember that the winning percentage cannot be considered without also understanding the risk and reward on the trade. The risk being how much you're looking to risk on a particular trade, the reward, how much you are going after. Now, in the PowerX Analyzer, we also provide the ROI based on those signals as the return on investment for the year if we took those trades with the target and stop suggested. And we also have a number here that is also very important. Excuse me while I get a drink. And that is the profit factor. The profit factor is a number that normally isn't included in your broker statements, and this is why we always suggest to log your trades, because with our trading log we make sure that the profit factor is a number that we can excuse me, monitor and keep an eye on. So the target and the risk and reward is what we're risking to and what we're after, right? But the profit factor tells us what really happened. The profit factor takes gross profits divided by gross losses, and what really matters, or what you really need to pay attention to with that, is that it tells you how much you made for every dollar risked. So even if we might be going for a larger profit or a smaller amount of risk based on the risk reward, the profit factor actually tells us what happened. Let's look at another stock just as one more example. So here we have actually let's use RMTI. I think Markus just got out of this one. A nice little move here. So with RMTI, we have a winning percentage of 63%. Is the winning percentage good? I don't know. Let's look at the risk reward, right? Okay, so the reward is $1.22, the risk's 50 cents. So we're making 2.5 times what we're risking on that trade. And if you could make $1.22 for every 50 cents risk, the 63% winning percentage is excellent. Here we have ROI of 120, almost 121. That looks good. But then the profit factor really paints a picture of what's really happening here. So with the profit factor of 584, this means that we made $5.84 for every dollar risked. So it's an important number there. So there was one other question I wanted to tackle that came up, and then we could wrap things up, get to trading, and I'm going to be doing some things, and it's very distracting running a coffee and Markus and trying to trade by myself, let me tell you. But there was a question I wanted to pop up, or I wanted to address. Okay. Maybe I addressed it. I don't see it. Okay, sorry guys. I thought I had a question that popped up. While we're talking though, just to wrap things up here, there were a couple of questions that came up about my crude oil trade. The question was, why don't you go short? Well, we found that for this strategy that we trade, this is in our Rockwell Trading Club. It's the Seahawk strategy. We found that longs are significantly outperforming shorts. So we focus on what's working. Thanks, Jerome. Dennis asks, can we have the risk reward displayed in a future version of PowerX? That's something that we're considering, Dennis. It's also why we've left these ADR values here, because what we do in the background is we look for multipliers of the ADR to determine the target and stop. Sometimes when we're looking at the dollar amount, the risk reward isn't as easy to determine, right? If you have like a $25.73 a target and like I don't know, $11.11 stop loss. Sometimes comparing these two numbers isn't as easy as comparing these two, right? And so it's a little easier to just quickly look at this and go, okay, that's about 2 to 3 times the risk. But good question. It's something we're considering. But the more we add, the less room we have for things, and so we're kind of going back and forth on that. But I think it's easy to just look at these multipliers, right? If we go to another stock as an example, okay, here, $6 or 160 to 8, right? Sometimes if we just look at the profit target and stop loss, it might be a bigger number and not as easy to see that relationship. It's a little easier to see that, okay, we're 4 to 5 times our risk. Okay. One last question, I'll wrap it up. A question from Jerome. What do you understand about the Fibonacci charts? Honestly, I love the idea about Fibonacci. And if you're new to the idea of Fibonacci, Google it. It's a fascinating concept. It's just amazing. But I haven't found that it's that easy to trade with. Um, I've traded with it in the past, and I love the idea. But if I look at a chart like this, I can see, okay, this is uptrend, this is downtrend. Here are my exits. Done. With Fibonacci, I'm using a drawing tool. Like, do we take this low, this high? Where do we go? There's just a lot more involved, and I like to keep things simple and incorporate different strategies. And when you're incorporating different strategies, trading binaries, trading futures, trading options, then you don't need to make one super complex. You can keep things simple and just combine things. Perfect. Hey everyone, I hope you enjoyed the coffee with Mark. Marcus should be back here next week, and we'll probably be doing a couple of sessions together. It's fun doing these sessions, and I hope you enjoy them and get a lot out of them. If you have any questions, definitely let us know and use that app to rate some questions, and we'll make sure that we tackle those. So have a great rest of your day and a wonderful rest of your trading week and a great weekend, and we'll see you back here next week. Take care, everybody.